So the stock market's been pretty volatile over the past month. It's been called one of the worst months in the history of the stock market, with the Nasdaq falling 13% in 1 month. It's the worst performance since the early financial crisis in 2008 of October. So a pretty rough time if you're investing out there, especially in technology stocks, but a great time to add as well. And another major milestone is that I've hit a new record in my dividend portfolio. I've received $76.98 in passive income for the month of April. So that is a new record for the portfolio. And despite my portfolio getting hit, of course, in terms of capital appreciation, that passive income just keeps coming in no matter what. So with that said, let's roll the intro and I'll get into the buys and sells for this week. So today was a very rare green day in the TFSA. We're up $68.50 or 1%, but still down 6% in the past month. We're down $841. So we started off buying a share of Apple. So Apple actually had a excellent earnings report. So Apple beat every single estimate that they had. They beat revenue by 8%. iPhone revenue is up. The one thing I really want to pay attention to is the services revenue really beat expectations, up 17% year over year. It's a very fast growing segment for Apple, and it's even higher margin than the rest of their hardware business, because every single user of an iPhone and iPad is a potential customer of these monthly subscription revenues, which is coming in every single month, kind of like rental income from a property. It's very predictable. It's way more reliable than just relying on a single sale, but Apple's doing that consistently anyway. And even their margins went up as well. On top of that, they're buying back $90 billion of shares. So that's basically like buying 3.5% of the shares outstanding. And they also pay about a 0.5% dividend yield. So you're getting about a 4% return just from the company giving you value by increasing your ownership of the company without you doing anything. And they also increased that dividend by 5%. So this is what I love about dividend investing is I got a raise for doing absolutely nothing, and that's one of the best feelings in the world that you can get. So we're getting more income from our Apple shares each and every month, and I didn't have to do anything for that. So great news for Apple shareholders, and I am very excited about adding more shares of this company as long as it stays at these pretty reasonable levels. And we can see how the other stocks are holding up in the portfolio. So, a lot of sectors are being down. AQN is slightly in the red, but holding on pretty strong considering the overall market sell-off in general. BABA is still down 28% just due to China and all their lockdowns over there. So that's definitely affecting Chinese companies right now. So that's a great reason to be diversified across many different countries, because, sometimes regions can have good times or bad times. And if you're in several different regions, you'll get a mix of good and bad at different times in case you ever need to sell your stocks for some reason short term. Brookfield's actually gone on a little bit of a dip, so I'd actually like to pick one of these up in the probably next week. I'll probably buy one of these. I like it at this price a lot. I reinvested my Scotiabank dividend. It's actually the largest dividend I've ever received in the portfolio, so about $13.40. I got a slightly larger one from TD Bank, but I just reinvested that right back into the company. And the nice thing is that Scotia Bank has been dipping, so I actually got to get a good amount of shares. So we're up to 13.66 shares of this. Just going to keep growing this position, reinvesting the dividend. If the price drops significantly, I'll just buy full shares of it and contribute to it regularly. And I also added one share of Intel. So they released their earnings and they got hit a little bit again. Another earnings report where their margins were a little bit lower, but again they told us that this would happen, and we know the reasons why. They're making acquisitions, they're paying for top talent, and one key thing from the earnings report I want to mention is that they are increasing spending on R&D. So the reason I'm buying Intel is because I believe that they're going to be more competitive in the future than they are right now. And how you do that is by investing in your own business and in putting money into research and development to make the best products that you can so that you can be competitive in the marketplace, because they've definitely lost a step, but I definitely think they can get it back. And they're making good products even right now. So I think in the coming years, Intel will be very competitive and hopefully get a nice lead at the forefront. But even if they don't manage to do that, they still have the chip fabrication plants that they're making, and they're not going to be paying for those forever. And once those are finished, their free cash flow is going to be much, much higher than it is right now. So I suspect that they would have really, really good earnings in probably 2025 or 2026. It's going to be pretty, boring holding until then. We're just going to sit back, collect our 3% yield from this stock. And once the sentiment and, of course, the turnaround happens, I anticipate that this stock will trade much higher than it is right now. I don't expect it to do anything in the short to medium term. So I don't really expect this to do anything until like 2025, 2026. And we can see companies like Loblaws, boring companies, are holding up pretty well during this volatility. It's one of the stocks that actually went up during this time as people are trying to flee to safety. But I don't think that's the best thing to do necessarily long term. I think you're better off, going into a company like Apple or like Microsoft when they drop, because these are quality businesses. I would imagine Apple and Microsoft will outperform Loblaws over the very long term, just because they grow at much faster rates. They buy back lots of shares. They raise their dividends very aggressively, and they just have more potential for growth than Loblaws. Ultimately, I only got this just because the valuation was pretty good, but right now it's not great. That's why I kind of stopped buying it. They're going to announce their earnings very soon, so we'll see what happens with the stock. If it jumps up a lot, I may actually sell it and then put it towards something else, but we'll see what happens. If it just kind of sits here, I'm happy to just hold it and collect the passive income. And Power Corp of Canada paid us a dividend recently, so I'm going to buy another share of this next week, actually, just because it's paying about a 5.3% dividend yield. And this is the company that owns Wealthsimple, so this is the brokerage that I use. So commission-free trades on all Canadian listed stocks and ETFs. So if you haven't signed up already, you can use my link in the description below and fund a personal account. And if you do that, you can get the value of a free stock worth up to $4,500. And not a bad time, considering the stock market is taking a beating. So there's a lot of great deals out there. And we can see even the real estate sector has been getting knocked down. If Smart Centers comes down a little bit more below my average cost basis, I'm going to look to add here, just because it'll be a good opportunity to lock up a nice monthly income for the portfolio, give us more cash flow to buy more income producing stocks, or just good growth stocks in general. And we got a $13.72 dividend from TD. So this is the largest dividend I've received in the portfolio. That's my largest one-time payment. We just put that right back into TD Bank. We're up to 15.55 shares. And it's recovered a little bit, but, I think at these levels it's going to be great, because I believe TD in the next probably 5 years will have a tremendous growth, at least in terms of the Canadian banks. I'd probably say TD and BMO are going to have like the best growth rates. And Scotiabank is, I really do believe in it long term. It does pay higher dividend right now. We're just going to have to wait for the issues in Latin America to clear up. And if that economy grows, then I think Scotiabank can surprise a lot of people with its results. And if you enjoy this video, you can follow my updates every single week by just subscribing to the channel and liking the video. That's all I ask of you. If you enjoyed the video, and you can follow along from week to week as I grow my passive income and try to reach financial freedom eventually. So we're just going there step by step. So for the dividends earned, we've earned $490.50 in dividend income since starting the portfolio. So almost $500 in passive income, money while we sleep, money while we live our lives. And, even if I'm sitting around doing nothing, this money is rolling in. Annually, we're up to 703.88. And we can see on the right-hand side, I have the previous week's numbers. So I can see even week to week, there's an increase. So, we increased our passive income by like over $5 in 1 week. Monthly, we're making 58.66, previously 58.21. So that's like another 45 cents or so. Weekly, we're making an extra 1 cent. So not much more on the weekly. Well, actually, almost 9 cents. And then daily, we're making 2 cents more per day, $1.93. So very close to my goal of hitting $2 a day in dividends. So we'd have to hit $60 a month of average passive income to reach that goal. And months to earn $100 is only taking about 1.7 months on average. And just this month alone, like we've hit $76.98 in one single month. And if we go back to the beginning of the year in January, I only got $54.96. So this is really, really good growth. And it'd be really nice to get this number to hit $100 in a month and just keep increasing our averages. So once I hit $2 a day, we're just going to have a goal to hit $3 a day, $4 a day, $5 a day. Just take it step by step, because a lot of our returns in this portfolio so far, after the market decimation, has been from our dividend income. And this is the only kind of income I can rely on, because I can't rely on the market, valuing my stocks at a certain level. But what I can rely on is a good quality business paying me a stream of cash flow every month or every 3 months. All right, with that said, have a great one, everybody. And please leave a comment below, like, what are you buying in this volatile market? Are you holding cash? What's your strategy during these volatile times? All right, have a good one.